Well, I'm sorry I didn't get a chance to post Sunday morning. I've been traveling here on Sunday. I've finished traveling, so I wanted to do a really quick update. Posted a video on you. Again, we're about to kick off here the market, and there's going to be a drop of greater than 20%. I think that'll be by January. I think the recession will start by December or January. I think we're going to get the Fed cuts. I think it will be associated with the sell-off, as I talked about. But we have the market, we have the futures jumping up, the S&P's up, coming up into the upper channel. I'll just show you that in a moment. Trump had threatened the 100% tariffs that would take the tariffs up to 157% by November 1st if they don't have a deal. They've reached a potential deal, and the two leaders are expected to meet here later in the week, I believe on the 30th. Ahead of the deadline. So futures rallying on that as the Treasury Secretary announces a potential deal has been reached that needs approval. Trump did cut off negotiations with Canada over tariffs, the market focusing on the potential China deal. Now, this could be a sell the news event, or again, it may happen, or there could be other catalysts. It's likely going to be, like it was in 2007, a sell-off surrounding the Fed. There's still risk of sour loans with the banks, with the regional banks. We've got earnings. We've got the Fed. We'll get a cut out of the Fed, but I think that Powell could have a negative tone on the economy, and that could trigger the sell-off. If that is the case, he's been showing some concerns about the economy. Getting a rally on this, let me just show you futures. As I mentioned, there were signals that turned back to bullish at the beginning of last week, and then late last week, all the others turned back to bullish on Friday. Watching to see if they revert back to bearish soon, with a triple divergence completing on many indicators. Momentum, the RSI, awesome oscillator. Here's a NASDAQ, and here's S&P. Is it going to be something like this where it turns bullish and then quickly turns back to bearish? Over here on August 1st, it turned bearish, quickly turned back to bullish. Is it going to be something like that? But again, some signals were already bullish on S&P earlier in the week, and then on Friday, I got several signals turning back to bullish. And again, we're likely going up to that channel line, excluding the wick from the 2022 low, which I'm showing you in this video. Some signals had turned bullish earlier in the week. I've talked about that on the S&P. A lot of them on the NASDAQ, as I talked about. But is it something like this where it turns back to bullish here and then quickly reverts back to bearish? Or turns bearish here, reverts quickly back to bullish? Is it something like that? Likely be something similar to that. Some of the S&P signals turned bullish in the beginning of the week. Others did not. And then Friday's rally, everything's back to bullish, but we're forming these divergences. You can see, again, earlier in the week, we had turned bullish some of the S&P indicators. We had the diversions back over here on October 9th. We're now forming a triple divergence on indicators, like right here with momentum, with the RSI, price oscillator, the awesome oscillator, a lot of, and I think the MACD has it as well, a lot of divergences forming. We're slamming up into this trend line right here with futures. You're forming a triple negative divergence. If I bring up the S&P 500, again, where futures is at, that would take us up into this trend line right here from these previous highs that formed the first divergence. Again, forming this triple divergence on the S&P 500 with momentum and with the oscillator and other indicators. So this is the S&P daily cash. The futures are going up and slamming up into that trend line. I told you that, again, if we did exceed the October 9th peak and get a breakout above that level, which we did there on Friday, the herd's going to be doing what they did with Bitcoin. The crypto herd, it's a breakout. The sell-off that's coming is going to be very powerful and painful for retail. This is a breakout designed to fool retail, just like what we had at Bitcoin at the October 6th peak. You went up for a day or two, and then you turned back down. This is very similar to really what we saw on the NASDAQ right before the drop. And again, my signals have turned back to bullish, but we're going up and we're slamming up into resistance. Futures channel now excluding the 2022 wick in a second, but we saw a breakout here just before the February sell-off, and this is where we dropped nearly 26% on the NASDAQ. And as you can see, signals are turning back to bullish. And again, we broke higher and then you reversed hard. Here, we broke lower and ended up turning back up. That sell signal ended up marking the summer bottom. We had more selling pressure later in August here again. The August low ended up marking the bottom. You went lower. So again, and here you went higher and then it went a little bit higher and then turned. You're probably going to see something very, very similar to that here. But signals back to bullish here. It's likely not going to last long. And here, and again, this is the S&P cash, NASDAQ 100 as well. Earlier in the video, I showed you the futures, and I'll show you the futures weekly chart in just a moment. But signals turning back to bullish. Again, you're likely going to see this rally end up failing. Major resistance in the weekly and the monthly time frame. Have that triple bearish divergence forming with the futures in the daily time frame. And here I've got this channel. Now, again, the channel I showed you previously earlier in the week and last week, again, I've included the low right here. Here, the channel, I'm excluding the low over here and just touching the 2020 low with the 2023 low, excluding that low and slightly above the 2025 low. And I told you, I've talked about this before, there's still some wiggle room to go higher if we exclude the 2022 shadow, parallel boundary to the 2022 high. And right now, futures is opening up and slamming right into that trend line. Now, previously, again, I've shown you this channel, including the shadow low in 2025. Here with futures, I've shown you that, but I've shown you on the S&P cash. Here, same thing with futures. I'm excluding the shadow here and not including that low, and you're slamming right into it. And again, trend lines, longer term trend lines, you never know. Channels will form including the shadows or excluding the shadows, and this one right now is excluding the shadows. But you're going up here and slamming into it as retail is celebrating the herd. They're celebrating, they're dancing in the aisles. This is definitely the opportunity, the best buying opportunity of a lifetime. Again, you're likely going to see a crash that's going to come back to this trend line or come back to the 200-week moving average or come back to the horizontal support level. And again, likely a crash that's going to kick off the bear market that will exceed 20%. I think the crash will be bigger than the decline over here of 21%. I think it's going to come down here 27, 28, 29, 30%, something like that. And I think you're forming a massive head and shoulders, as I've said. And I think, maybe the neckline is slanted a little bit higher. Maybe it's horizontal or maybe it's slanted down. We don't know, but that's what I think is going on here. So I just wanted to make you aware of that with futures rallying up. Again, if you exclude the shadow from the 2022 low, you're slamming right into it. Previously, I've included this low right here as I've shown you over and over. And the reason why I drew the upper channel line, including the shadow low, and here it is because we were slamming right into it with our previous high. Our previous high slammed right into it. Rather than excluding the shadow here and connecting to the 2023 lows, what I was doing is I was connecting the 2020 low to the 2025 low, as I've talked about previously. So again, including the shadow or most of it there, but just really rather than focusing on these levels, I was focusing on 2020 to 2025 and drawing the parallel boundary at that because that's where we reached. But as I've said, shown you that there's still wiggle room. Talked about that over the weekend, talked about that previously. And here it is. Let me just show you real fast. If we take the 2020 low and we exclude the shadow from 2022 and you connect the 2020 low to the 2023 low and exclude the shadow from the 2025 low, again, and draw a parallel boundary from the 2022 high, then you could still go higher. And that's what we're seeing with the S&P futures with the Sunday open. Previously, we had also turned off of the 2023 trend line, the blue trend line you see right here in the weekly time frame, connecting this low and the low right here. So while it leaves a little more wiggle room to go higher here, as we're likely seeing here with the futures, again, you're probably, as I talked about over the weekend, see a peak last week or this week, and again, going a little higher this week here starting off. Very likely, I think you're going to see some kind of sell-off, and maybe that's with the Fed as we had in 2007. But on the daily chart with the diversions from these previous highs, as I showed you on the daily chart, the divergence from these previous highs, again, pointing right up into this area, including the shadow there, which is where we're seeing futures at right now. So again, I wanted to update you on that. I told you I thought we had a good shot at getting a peak on October 9th, but could still move higher if we failed to confirm the reversal bar in the daily time frame, which we did. Talked about that at great length and detail. I think we're going to see the Fed meeting associated with the sell-off like we did over here when rate cuts started back in 2007. You got the rate cuts. You ended up topping 17 days later here. Now we've gone longer. There are similarities with 2007. It's not perfect. Inflation was ticking back up. Started seeing a deterioration in the labor market, and there's a lot of similarities. But here we topped, we sold off to the 50, we bounced, and we got a lower high with the October 2007 cut here again, which led to a sell-off. And also the December cut led to a sell-off. And it wasn't until January that we saw the Fed panic. Again, as I said over the weekend, if you see a top this last week, or now this week, one of them going forward 10 weeks or so puts you into January. That's when I think the Fed is going to panic. You're going to get your jumbo cuts, and I think the recession will start in December or January in all likelihood. It's like Bitcoin, just like back here in 2007. The breakout ended up failing, and this followed. Well, the herd was celebrating. Right now, the herd is celebrating. We're likely forming a top, and I think you're going to get a 20% move or greater. And I'm thinking 27, 28, 29, 30% on the S&P 500 by January to kick off the bear market. I think it will be a bigger drop than what we saw in February of 2025, which was 21%. I think it'll be bigger than that. The S&P likely pushing right up into the trend line from the previous highs, and we could take that all the way back to the July peak here. And again, you're likely forming a triple divergence in the more recent price action here, larger divergence with the previous summer highs. Our sell-off on October 10th, I've changed to wave 4 here. And again, L8 wave's totally speculation, but we're likely pushing into that upper trend line there. And this is a trend line I showed you in the more recent price action with the S&P and futures there. But here it goes back further and you can see it. And again, I've drawn a trend line from this low now. You're still forming a rising wedge. You're back testing this other trend line when you go up to that red trend line, which is where we're likely going to see market open on Monday. The MACDs turn back up, and size turning back up, and again, I've seen signals turn back to bullish for the S&P back on earlier in the week. We talked about earlier in this video, and then on Friday, more signals turn back to bullish. So again, probably going up to that channel, excluding the low from the 2022 low. Doesn't change anything. We're still in a topping process. The rally designed to lull the retail traders into a false sense of security that there's nothing to worry about. You're likely about to have a bear market that's going to come down here. And I think you're setting up, I think you're going to get this drop of, 20, 27, 28, 29, 30% or so, depending 30% would take out the slow. 27, 28, 29% would be just above it or at it. 29% would be at it. But I think you're setting up this massive head and shoulders. I think you're going to sell off into January. I think you'll rebound back up with the Fed will panic. You'll get rate cuts there. You'll get a right shoulder, and then you're going to see a 50 to 65%, maybe more on the S&P because it's now NASDAQ Junior. So the sell-off will likely be greater than the previous two sell-offs of 51 and 57%, the last two bear markets. I think you're going to go get a bigger sell-off than that on S&P. NASDAQ will drop, 70 or 80 plus percent. When the bursting of the tech bubble happened, NASDAQ ended up dropping 42%. It rallied back up big time, and then it ended up dropping 83%. NASDAQ Composite, 82%. NASDAQ 100, 83%, about 83.5%. I think you're going to see something similar to that. I think Bitcoin's going to drop, 84, 86%, something like the previous two bear markets, or the prior two bear markets. The last one was 78%. This is what I think is going on. The time is short, but because the stock market is remaining elevated, it causes people to think there's nothing to worry about. When, again, we're likely days away from starting a bear market and starting a 20+% crash that will likely give us this head and shoulders. You got that broadening formation still on the NASDAQ. Told you, we overthrew the upper boundary before. We're doing it right now. Doesn't negate the pattern. It's still there. NASDAQ 100 slightly overthrew the upper boundary, the trend line there on Friday, and it may go higher. Again, you could overthrow the trend line. That doesn't negate the pattern of the broadening formation. It's still present, but that allowed the RSI to turn higher. That allowed the MACD to turn back up, and you're forming this massive divergence. So suggesting something's about to happen. And I know we've got a lot going on. We've got big earnings. We've got the Fed. We've got the rate cut. We've got the possible tariff deal now here. But if not, the 100% tariffs looks like they're going to get a deal. Even if they do, it could be a sell the news event. There could be other catalysts. You still have the concern about the banks. The most recent price action, we're also forming a triple negative divergence on the NASDAQ, just like on the S&P 500. Just wanted to do a quick short update. I was traveling and couldn't get something posted by Sunday, but wanted to update you. Signals turning back to bullish earlier last week, and then late on Friday, more signals turning back to bullish. And as we're doing that, we're forming triple divergences in the most recent price action.